Want to know how to reduce your personal tax in Australia? Imagine keeping more of your hard-earned money legally. Intrigued? It's not as complicated as you might think. Stay tuned to discover the top 10 ways to lower your personal tax. Understanding tax reduction is a powerful tool to keep more of your hard-earned money. It's not about evading your responsibilities, but about making the most of the regulations and benefits that exist. By understanding the basics of tax reduction, you're taking the first step toward financial mastery, and we're here to help you with that. The upcoming list will provide you with practical, applicable methods to lighten your tax burden. So, without further ado, here are the top 10 ways to reduce your personal tax in Australia. Number 1 on our list is understanding your eligible tax deductions. Every dollar you can deduct is a dollar saved, so get to know what you're entitled to deduct. Secondly, claim deductions for personal superannuation contributions. If you make voluntary contributions to your superannuation fund from your after-tax income, you may be able to claim a deduction for the amount of your contributions up to a certain limit. For the 2020-21 income year, the limit is $25,000 per year for all types of contributions. However, you need to meet some eligibility criteria and notify your fund of your intention to claim a deduction before lodging your tax return. Third, invest in a tax-effective way. If you have some spare money that you want to invest, you may want to choose an investment option that is tax-effective. For example, you can invest in dividend imputation shares that provide franking credits that reduce your tax liability. Alternatively, you can invest in capital growth assets that defer or minimize capital gains tax. However, you need to consider the risk and return of different investment options and seek professional advice if needed. Fourth, claim deductions for work-related expenses. If you spend money on something that is directly related to your job or income, you may be able to claim it as a deduction in your tax return. For example, you can claim deductions for uniforms, tools, equipment, travel, home office expenses, education, and professional memberships. However, you need to keep records of your expenses and be able to prove that they are necessary for your work. Fifth, claim the Low Income Tax Offset, LITO. If you are an Australian resident for tax purposes and your taxable income is below $66,667, you may be eligible for the LITO. This is another non-refundable tax offset that reduces the amount of tax you pay. For the 2020-21 income year, the maximum amount of LITO is $700. Sixth, claim deductions for donations and gifts. If you donate money or goods to a registered charity or organization that is endorsed by the Australian Taxation Office, ATO, as a deductible gift recipient, DGR, you may be able to claim a deduction for the amount of your donation or the market value of your gift. 3. However, there are some conditions and limits that apply, such as the minimum amount of $2 and the maximum amount of 10% of your taxable income. On to number 7, investing in rental properties. Rental property expenses can be deducted, and if your property operates at a loss, you can offset this against other income. 8th, claim deductions for tax agent fees. If you use a registered tax agent or accountant to prepare and lodge your tax return, you may be able to claim deductions for the fees they charge you. 9th, take advantage of government incentives and rebates. The Australian government offers various incentives and rebates that can reduce your tax or increase your refund. For example, if you have private health insurance cover that meets certain criteria, you may be eligible for the private health insurance rebate that reduces the cost of your premiums. Alternatively, if you have installed solar panels or other renewable energy sources in your home, you may be eligible for the small-scale renewable energy scheme that provides certificates that can be sold or traded for cash. Finally, lodge your tax return on time. One of the simplest ways to reduce your personal tax in Australia is to lodge your tax return on time. The deadline for lodging your tax return is the 31st of October each year, unless you use a registered tax agent or have a different due date. If you lodge your tax return late, you may incur a failure to lodge penalty that increases the amount of tax you owe. Therefore, it is important to prepare your tax return early and lodge it on time. And there you have it, the top 10 ways to reduce your personal tax in Australia. To recap, reducing your personal tax in Australia can be achieved through a variety of strategies. From income splitting and tax deductions to superannuation contributions, capital gains tax exemptions, and making use of government incentives, there's a myriad of ways to lighten your tax load. Don't forget about investment properties, charitable donations, or even just keeping a meticulous record of your expenses. Remember, every dollar saved on taxes is a dollar you can use elsewhere. So start exploring these strategies today and see how much you could save.